Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.8% there on the S&P. Market was up pretty much all day throughout the day. And then we did see last hour sell off here, as you can see. So pretty much this was the gap up from this morning. A second hour, third hour, fourth hour, we hung around there. This gap's still not filled. We talked about this level here. And just to follow up from what we talked about over the weekend, we talked about that there was this gap. We gapped it over, right? And that was the best case scenario for the buyers. Buyers wanted to gap it over. Buyers want to make sure that, not to mess around with their resistance. So we finally gapped it over. We continue to push higher, second hour, third hour, fourth hour. And then we got into the resistance area and we failed in that vicinity. I've tweeted out this morning, not this morning, but at the highs here, midday. This was when the oscillator was. So you can see this was resistance here on the oscillator. We talked about that over the weekend. And this was kind of when it was poking its head up on Friday after the close. So this entire move was from today, as you can see here, and then it soared and it got to even higher than previous high here. So we actually am cultivating higher highs here. You can see that high, higher high, higher high, low, higher low. But anyhow, we got into extremely oversold level. This was when S&P Spider was trading about 322, right? So you can see the third hour, fourth hour, we stalled there. And then the fourth hour, what happened was on the fourth hour, there was this gap. Remember the gap from this morning. So we did see initial bounce there on this gap area, hence the long lower wick here. And then the last hour, it looked like domino effect, stops were getting taken out. I actually think psychologically speaking, I think a lot of people jumped in long, a lot of short-term retail traders, because this is it's pretty prominent resistance area, right? Nowadays, everyone have their, charting software, right? They all can get it for free nowadays. So everyone nowadays, all the retail traders, all the newcomers, all the millennials, everyone is looking at these levels closely nowadays. So we know that, this has been in the consolidation, this box area right here that you see in your screen. And we've been hanging around here for about a little over a month now. And then we poked this head up on Friday, close. So I think when it gapped up today, I think a lot of people kind of chased it to the upside. Right? But also you have to understand that where the market was, and we talked about that oscillator getting into that, was overbought level. The oscillators. So basically after that gap up, right? As I've tweeted it out earlier today, buyers were kind of getting tired. Despite the fact that we look like, and we talked about it on Friday, that even though if we see a gap up, it's going to be such a small gap, we can't look at that as a big island gap. Remember that we talked about that. It would have been better if this, again, we talked about on Friday that if it would have been better if we started here and then you would have gapped above like 320. That would definitely qualify as island bottom gap, but by the time bulls gapped it up, had a slight island bottom reversal, but by the time we got to that level, we're seeing that buyers were getting tired. But I actually didn't expect to see big sell-off like that we saw in the last hour. I actually thought that we'll kind of hang around in this gap area and then market will kind of see what happens tomorrow, because that gap area is going to act as support. So after seeing the last hour sell-off, it looks like a lot of times it happens. Remember, I always talk about if you chase, market loves to punish the chasers and rewards the risk takers, right? So I think right move would have been buying somewhere in this vicinity, adding somewhere here. you know, and then riding it instead of chasing this, waiting until a breakout. Remember, I never place a breakout trade. I just don't like it, because especially for the fact that market made a good run, pull back a little bit, and then made another run. By the time we got there, market was already getting tired. Buyers were getting tired. Last time we got to that level was back in early June. So buyers actually done a lot of work to get up to the extreme oversold level, so overbought level. So you can see if we go back all the way to March, you know, let me see here, because we didn't quite get there here. So we started getting to that level in May and June. So mid-May, early June, and then today. So only 3 times we hit that. Here, I'll show you. So you can see, right? You can see that there's some space here. So we didn't quite get to that extremely overbought. We didn't quite get to the extreme overbought. We didn't quite get to the extreme overbought. We only did that 3 times this 3 to 4 months rally. Was again this right here in mid-May, right, mid to late May, and then right here in early June, and then here today, right? Let's do that a little bit. So we did get into pretty extreme overbought reading. But you can't blame the oscillator, because we did see pretty smooth move in just a couple weeks here. So, but again, I actually didn't anticipate. I actually didn't expect to see that kind of sell-off. I actually thought we were going to hold this gap. So whenever I see kind of a shenanigan like this, it happens because somehow, some way, you know, this insidiously clever market knows when everybody's chasing. A lot of these short-term retail traders, what happens is they start chasing because they see that this thing broke out multi-month, not a multi-month, but probably entire month of base. You can clearly see that this is a nice base. And we broke out with a gap up. So that makes a lot of people, not only it makes a lot of people excited, but it makes a lot of people impulsive, because they feel like, wow, what if this thing gaps and then just keeps going higher until the all-time high? I better get in before I miss this train, right? So then, because right at the gate, we started rising high. Like, we kept rallying, and everything seemed very bullish. I was watching, not on the first hour, but second and third, fourth hour. Everything seemed very, very bullish throughout. And then we saw the banks and the small caps and transport start participating, because it was the NASDAQ that was leading, and then the S&P kind of right behind it. And then for a while, we saw Dow Jones started really, really get it going. I even tweeted out that Dow is now leading the market. So Dow started leading. This was when, you know, everything was up top here. Dow was leading, and then the S&P, and then the small caps and the financial sector, they started following the Dow. And this was the point. This was at the point where, when we saw that signal, right? This was point where we start to see the NASDAQ slowing down. We start to see the NASDAQ slowing down, and then S&P slowing down, and then we start seeing the Dow and then small caps and Russell, or small caps and the banks, they started to stay up. And then you can see NASDAQ started rolling over. NASDAQ started getting into red, right? And that's when we saw that move. We saw brief dip buying activities there, right? And there's no surprise, because that's a gap area. It's going to act as support. And then the last hour, you see that how the gap got filled, and we didn't even see any kind of support when the gap got filled. A lot of times when you see something like that happening, it usually means just all kinds of stops were getting taken out, meaning a lot of people jumped back long up here, and they place a stop beneath that candle low, or below the gap area. All right, right? And also probably a lot of shorts maybe started covering up here. And market is insidiously clever in that way, because the market wants to take money on both directions, right? The shorts got squeezed out. They finally closed out their shorts, maybe even flipped long. And then a lot of longs started chasing up here after seeing the 1 month of consolidation breakout with the gap up. and seemed like everything seemed bullish throughout the day. And they placed their tight stop here, and then first stop got taken out, and then after that wait and just everybody started just, you know what I mean, in panic. Everybody started, you know, closing out their longs, and so we saw that sequence of last hour sell-off shenanigan today. So every time when you see a shenanigan sell-off like this, you want to look at this market objectively, right? So first of all, we have to think about, are we in a downtrend or an uptrend? Are we in a downtrend? Is the market cultivating higher highs, higher lows, or lower highs and lower lows? Right? So we have to kind of objectify that and understand where we're at in a kind of a bigger picture. So we can see that we have higher high, right? And you can see that that's a high, that's a higher high, that's a higher high. That's a low, that's a higher low, that's a higher low. As of today, as of now, as of this moment, things can change tomorrow morning, but as of this moment, we have to agree that this is higher than here. I did adjust my short-term moving average here, the squiggly line, as you can see, to get the adjusted moving average. See the description below to see the setting for that. The reason I adjusted is because I want to accommodate this move here, because there's some shakeout here. You guys remember back in this last week, was it last week? That's Wednesday last hour ramp. Thursday we gapped up, and then we saw first 2 hour shenanigan got lower. We even made a lower low. And then midday Thursday until the last hour, we saw the rally, and this was Friday, and we rallied every hour on Friday, and this was today, and then a shenanigan today, right? So just looking at like 5 days of trading sessions here, there were a lot of up and downs, but we have to understand the fact that, okay, there were a lot of up and downs. So you know, a lot of bears like to say, well, okay, with that move, this is non-event. See, that's not true. So you and I, we understand this is non-event. You have to understand the cultivation, right? Just like this is not non-event, right? People say, okay, we made a move, came down. Okay, now that's a non-event. No, that was a cultivation. And this is how buyers operate. You guys remember that? We've been talking about this. Buyers absorbing volatility. Because remember, if this thing came down and then came down again to the downside, that would have been much more technical damage in the S&P. While the market attempted to move higher and then pull back, with that we saw a consolidation, right, sideways move, and that's how buyers like to operate, and that's how buyers like to absorb volatility and make it time to make this another run. And even with the today's sell-off, we have to understand that we have higher high here. And I want to be fair with the buyers because they have the cultivation. This definitely a cultivation, right? That's a high, that's a higher high, right? We have the cultivation. We even broke above this level right here, which is going to be important, level 314, 311. So as of today, as of now, micro term, it's bearish, because you can see that micro term, we do have a very, very fast sell off here. And we didn't even see any kind of support on that gap area because everybody's panicking. All these short term traders are panicking. Their stops are getting taken out. And so the domino effect occurred as the market was punishing the chasers. So in the micro term, it's bearish. Short term, I kind of want to give it neutral, not so bullish yet. I mean, we are staying above it. Right? So again, I've adjusted my short-term moving average today on the description below. You can see the adjusted short-term moving. My mid-term moving average just below it. So mid-term, I still want to give it bullish in the mid-term. Obviously, long-term is bullish. So we got the micro-term bearish, short-term neutral, mid-term bullish. And the mid-term is mostly bullish is because of the cultivation of higher highs here, right? And then higher lows, right? And then long term, obviously, we're bullish in the long term. We haven't changed bullish sentiment in the long term since April. So, and also I threw that fib here from here to here. I mean, that's the important level here, the low here and the high, right? And today we came right down to my first level Fibonacci right here. Don't worry about that number there upside down, but just understand the level. That's the first level, and that's the rising support. and we have the short-term moving average residing in that vicinity. So if we don't see a support right away, what buyers need to do is some kind of a fast bullish move first couple hours of trading tomorrow morning, right? Just some kind of a fast bullish move. If not, we start fizzling or something like that, but bears might try to bring it down to retest 312. And then, you know, maybe meet with my midterm moving average. We got 50% retracement at 311. So this vicinity going to act as support here. That vicinity going to act as support. We're going to see some buying activities there, unless we see some buying activities right away here, right? And just from what I can see, when you see a shenanigan like this, like some shenanigan move like this, there's some lot of panic selling and stuff like that, I won't be surprised to see some kind of a weird high gap up from here. I think that's a low probability scenario. But like 1% gap up or something like that. I know market has been performing the surprises. So I kind of want to mention that because from what I see, sometimes this kind of stuff happens. Like market makes a new highs here, and then market just very quickly want to chase those, punish those chasers real quick, make them scared, and next day it just goes right back up. We've seen it happening before. Let's see, like something like this right here. So okay, so this is actually a pretty good example right here because there's a gap involved. I mean, there's a gap up here, right? And the market moves high. And this was when the market's trading well above my short-term moving average. We saw a gap up, and you see it rallies first hour, second hour, third, fourth, fifth, and then we saw last hour, kind of a last hour sell-off, right? This candle tells you it actually gapped up. Here, let me zoom in. I mean, it failed, but I'm just telling you what here. I'm gonna zoom in. This was back in. So right here, so there was a gap, and then we continue. This was back in what, early May. We move higher. Like we see a pretty nice, decent sized gap up first hour, second hour, and then we start stalling third, fourth, fifth. We start the last hour sell off, and then we see a shenanigan gap up. So this means this thing where it closed the day before, the next day, this is where it gapped up. And then it finally, in this scenario, we did see a gap up, we didn't see a follow through, so it came back down, and then finally, this thing get this thing coming down and filling this gap right here. You saw that filling this gap. And then what happened? We saw another gap up. See that this is where it closed, we gap. So whenever you see these shenanigan down moves, especially when we have established uptrend, right? I wouldn't be surprised to see this thing gapping up 1% or something like that. And then after that, I don't know. Like after the gap up, are you going to sustain it and the market is going to continue higher? Are we going to do something we just witnessed just earlier? I'm giving you that explanation or that example. Are you going to start fizzling down? That I don't know. We have to come back tomorrow. So I just wanted to let you know that sometimes when you're dealing with established uptrend, which we have today, and then you see this kind of shenanigan, that's when, shenanigan up move can happen. In a conventional, normal circumstances, we might fizzle here tomorrow, or we might see a continuation to the downside. So let's check that oscillator here real quick. So looking at the oscillator, we did see a full cross. We do see a downside cross. What we have to understand is we did get above that falling resistance, and last time you saw that another whoomp of a move here. So we might come down a little lower, maybe meet with that resistance as new support. We may see another move higher, or we come down to here and then move higher, right? So I think this is the juncture where we really have to see how the market behave first couple hours of trading tomorrow morning, and we'll get a better idea. As of now, it's kind of difficult to guess, but only thing I can tell you for sure as of this moment is we are still in an uptrend, and that means I still want to give benefit of the doubt to the buyers, right, in the mid to short term. And then first couple of hours of trading tomorrow morning will give us a better tell what we could expect going into tomorrow and maybe next day. So you can follow me at 2K Kim on Twitter and Stock Tweets. I will tweet things out if I see any kind of development. But let's see how the market behaves. Looking at this support area there, definitely that's the level of support. We got the short-term moving average in that vicinity, the first level Fibonacci there. Also, keep in mind, I wouldn't be surprised to see some kind of shenanigan gap up whenever there's some kind of craziness, when some kind of shenanigan happens this way. So that's also a possibility. Doesn't mean it's, if we get a gap up, doesn't mean market could continue higher. We could fail too. So I think with this recent move, I could kind of see that some short-term traders are kind of rattled at this point. So when they're rattled, you could see some shenanigans, up or down, right? Up or down. But because we're in an overall uptrend as of today, as of now, I won't be surprised to see some kind of a shenanigan up move. But either way, going into tomorrow, overall posture still, despite the fact that we did see last hour sell-off, but we've seen this before, right? So we want to continue to give benefit of the doubt. The posture is bullish. Benefit of the doubt to the buyers. Overall perspective going into tomorrow. With micro-term selling pressure that needs to be proved, that if bear is going to continue by looking at an early couple hours of session tomorrow morning, which I will tweet things out. If you follow me at 2K, I'll let you guys know, what the oscillator is doing. Are we breaking above some of these moving averages or the fib levels and this the rising uptrend support? I'll report that when I see it. So we'll go from there, right? So I'll talk to you guys tomorrow morning. You guys enjoy your evening and good luck trading tomorrow.